Wednesday, April 9th, 2025, and this is the 17th FinWell Daily Brief. We're going to break down today's big financial market move, economic news. All this is based on the closing bell data at 3:30 p.m.
Right.
And, the markets have kind of given us a little bit of a mixed bag today. We've got the Reserve Bank of India, our RBI, trying to give the economy a little bit of a push.
Yeah.
But, at the same time, we've got these kind of global trade tensions that are kind of brewing out there. It's an interesting clash, to say the least.
Yeah, it is. It's a real tug of war. You've got
Yeah.
the domestic easing on the one hand, trying to boost growth.
Yeah.
And then you've got these sort of the global trade issues kind of holding things back.
Yeah.
And you see that reflected in the market performance today.
Exactly. So let's jump right into it. Let's take a look at the Nifty 50, our benchmark index. It closed today at 22,399.1%.
Okay.
Now, that might sound like a big number, but it's actually down 136.70 points.
Yeah.
That's a drop of 0.61%. And it wasn't just the big companies, the larger cap companies that felt it today.
No, it's across the board, really.
Yeah.
I mean, the mid-cap and small-cap indexes also saw declines. The Nifty mid-cap 150 closed at 18,272.75.
Okay.
That was down 114.30 points, so 0.62%.
Got it.
And then the Nifty small-cap 250 closed at 14,345.70, down 152.7 points, which is 1.05%.
Right.
So you're really seeing kind of a consistent picture there across all segments.
Yeah. So the markets are down, but why? What's going on here? What's the story?
Well, there are a few things at play. I think a big part of it is this decision from the RBI today.
Okay.
They announced a rate cut.
Right.
25 basis point cut in the repo rate,
Yeah.
which is now down to 6.00%.
Okay. Can you just remind our listeners what the repo rate is really quickly?
Sure. So the repo rate, it's essentially the interest rate at which commercial banks borrow money from the RBI.
Got it.
So when they cut this rate, it makes borrowing cheaper.
Okay.
And that's what they've done here.
And this was done because of the RBI's kind of worries about growth, right?
Yeah. I mean, they're looking ahead, and they see potential headwinds.
Yeah.
Particularly from these new U.S. tariffs on Indian goods.
Okay.
So by cutting rates now, they're trying to kind of get ahead of that.
So it's like a preventative measure.
Exactly. It's like, they're expecting things to slow down because of these tariffs, which are going to make, Indian exports more expensive.
Yeah.
And so they're trying to kind of counteract that by making it cheaper for businesses and consumers to borrow money.
Got it.
To hopefully keep the economy moving.
Okay, so that's what's going on domestically, but we also have this this global kind of backdrop,
Yeah.
the trade tensions that are happening,
Right.
especially between the U.S. and China.
Yeah, I mean, that's a big factor.
Yeah.
And the latest thing we've seen there is a sharp depreciation of the Chinese yuan.
Okay, and that's affecting us.
It is.
Yeah.
It might not seem directly related, but everything's connected these days.
Right.
And what happens in one big economy can have ripple effects across the world.
So I guess that's what's happened with the rupee then.
Exactly. So today, the rupee fell by 0.4% against the U.S. dollar.
Yeah.
It closed at 86.65.
And that's because of the yuan.
Well, it's partly because of the yuan.
Okay.
See, when the yuan weakens like that, it puts pressure on other Asian currencies
Right.
because it makes Chinese exports more competitive.
Makes sense.
So other countries have to kind of follow suit to keep up.
So a weaker rupee, what does that mean like for people here in India?
Well, a few things. It means that imported goods become more expensive.
Okay.
So, everything from electronics to oil,
Right.
that can push up inflation.
Okay.
It also makes it more expensive for Indian companies that have borrowed money in dollars or other foreign currencies to repay those debts.
Got it.
So, not ideal.
Not ideal, no. Okay, so let's move on to the bond market.
Sure.
That's often seen as a bit of a safe haven
It is.
when things are, uncertain.
Yeah.
And we did see some movement there in the 10-year government bond yield.
Yeah. As of yesterday, the 8th, the yield was 6.562%.
Okay.
And that's actually a decline from previous levels.
Okay, so what does that tell us?
Well, in the bond market, when yields go down, it usually means prices are going up.
Right.
And that suggests that there's more demand for those bonds.
Okay.
And one reason for that could be that investors are looking for safety.
Makes sense.
They're getting a little bit nervous about the trade situation, the economic outlook.
Yeah.
So they're moving into government bonds, which are seen as as less risky.
Right. So moving away from stocks, moving towards bonds.
Exactly.
Okay. And speaking of moving away from things, we also gained some data on foreign investors.
Right.
And it looks like they've been selling off some of their Indian holdings.
Yeah, that's right. As of the 7th, foreign investors were net sellers in both Indian equities and bonds.
Okay.
Over $1 billion flowed out of Indian stocks
Wow.
and almost $340 million out of bonds.
Okay. So I guess that's another sign of nervousness, right?
Yeah, I mean, it reflects those same concerns we were just talking about.
Right.
The trade tensions.
Yeah.
The worries about economic growth.
Okay. Well, it's not all bad news. We did have some good news on the foreign exchange reserve front.
Oh, that's right.
That's a bit of a silver lining, I guess.
Yeah, absolutely.
Yeah.
So India's forex reserves, they reached a 5-month high.
Okay.
$676.3 billion as of April 4th.
That's huge.
Yeah, and that's up almost $11 billion in just 1 week.
Wow. And why is that important?
Well, those reserves, they act as a kind of a buffer.
Okay.
They help us manage our imports
Mhm.
and keep our currency stable,
Okay.
especially when things are a bit rocky globally.
So it's like having a safety net.
Exactly.
Yeah.
And right now we have enough reserves to cover about 11 months worth of imports.
Okay, so that's good news.
Yeah. That's right.
All right, so let's move on to something a little bit more, a little bit more exciting perhaps for our listeners.
Right.
What are the analysts saying about specific stocks?
Yeah. So despite the overall market downturn today, there are a few names that analysts are highlighting
Okay.
as potential breakout picks. These include Paradeep Phosphates,
Okay.
Cholamangalam Financial Holdings,
Okay.
Valiant Organics,
Yeah.
BSE, and Lloyd's Metals and Energy.
Okay.
Now, obviously, this is just analyst opinion.
Right.
It's not, financial advice.
Right.
Anyone considering investing in these should do their own research.
Of course.
But these are just, some names that are on the radar.
Okay, great. So let's try to kind of sum all this up. We've got the RBI cutting rates, but we've got global trade tensions. We've got a weakening rupee.
Right.
Foreign investors are pulling out. What's your take on all this?
Well, it's a complex picture, right?
It is.
I mean, the RBI is clearly trying to support growth, but it's tough to do that when you have these external factors weighing on you.
Right.
The global economy is so interconnected these days
Yeah.
that, what happens in China, in the U.S., it affects us here in India.
So what should investors do?
I think caution is key right now.
Okay.
But that doesn't mean there aren't opportunities.
Right. So where might those opportunities be?
Well, for example, the rate cut could be good for some sectors,
Okay.
like banking, real estate, automobiles.
Right.
Lower interest rates could make it easier for people to borrow money and buy things.
Yeah.
On the other hand, companies that rely on imports might struggle because of the weaker rupees.
Right.
So it's really about being selective.
So what's your overall advice then?
Well, diversifications is always important. Don't put all your eggs in one basket.
Okay.
Also, focus on quality.
Mm.
Invest in companies with strong fundamentals, good management,
Got it.
and be prepared to be tactical.
Tactical.
Pay attention to the market trends, to the news.
Yeah.
And be ready to adjust your portfolio accordingly.
Okay. So to wrap things up for today's FinWell Daily Brief, the Indian markets, they're in a state of flux.
Mhm.
We've got support from the RBI, but we've also got these global pressures.
It's a balancing act.
Yeah. It makes you wonder, how effective will the RBI's moves really be in the long run?
Yeah, that's the big question.
Yeah,
Only time will tell.
it will. It certainly will. Now, if you enjoyed this breakdown of today's financial news, be sure to subscribe to the FinWell Daily Brief wherever you get your podcasts. We'd also love to hear from you. Connect with us on LinkedIn, share your thoughts, ask questions.
Let us know what you'd like us to cover in future briefs.
Exactly. We're always looking for feedback.
Yeah.
And to leave you with a thought for today, in investing, what is comfortable is rarely profitable. That's from Robert Arnott.
Wise words.
They are. Until next time.